Good evening, everyone. Welcome for tonight's webinar. Uh, okay, we have like three of you. Where are the rest? I hope they'll be able to join us. Huh? Hello, Sir Josh. Welcome back. Sir Arvin. Welcome, sir.
Thank you, sir.
Yes, welcome back again in our webinar, weekly webinars. And who else? Zoom user, iPhone. Mr. Eduardo, sir, how are you? Glad to have you with us tonight, Mr. Leon and Laarni. Yes, good evening. All right. Okay, we can start now. So tonight, my friends, okay, I believe majority of you are beginners in trading, right? So as a beginner, we need all the information we have in trading, so we will have the edge, right? And what more uh, uh, information, especially at this stage in your trading journey, is about knowing about the indicators in the charts, right? Who among you here have heard the term indicator? Any idea? Do you know what an indicator is? No idea? Anyone? There's no wrong answer here. Just say whatever is on top of your head, and let's start with that. Indicator. What is an indicator? No idea? Still no answer. Huh? It means no one knows.
Sir, may I?
Yes, sir, sure.
I think indicators will help you to analyze the market, what
Okay.
it goes. This will help you. Then, but for me, I don't know what
Okay.
is the use of these indicators.
All right. Very good. Is that Miguel who answered me?
Si Sir Arvin.
Arvin. Okay, sir Arvin. Thank you for your answer and engagement. Huh? Very good. I like that. It's because it means you have really some deep interest on learning forex. Yes, you're right. An indicator is a tool, okay, you can use to read price action, whether it will go up, so meaning you need to buy, or it will go down, meaning you need to sell. That's it. That's the concept, the idea of an indicator. All right. So very good. I hope everyone is catching up on the discussion because the indicator is a tool used by, I guess, all the traders in the world, even profitable traders. Okay, some millionaire traders, they are still using an indicator, at least one indicator in their chart. All right, like have you ever heard of Alex G of uh, as now he's he's a big guy in forex space. Alex G, Mamba FX. Have you heard of these people, these traders? They have at least one indicator in their chart. Okay, regardless of price action, they must have this indicator. And I will share to you what they are using in a moment. All right. So that's it. That's basically what an indicator means. All right. So let's go on through our main content for tonight. Okay, number one, moving average. Okay, this is one of the indicators used by traders. Number two, types of moving average. Yes, there's sorry for the typo. Let me fix that. Average. Okay, types of moving average. There are types of moving average, and you will know that in a moment. How does it work? How do you use it? Okay, the 50 EMA and the 200 EMA. There's a 50 EMA means exponential moving average. Okay, exponential moving average, and there's an SMA. Yeah, don't confuse with the two. SMA means simple moving average. Okay, and what else? Stochastic. Stochastic. This is my favorite of all the indicators. Okay, even now, okay, I cannot. I cannot live without this indicator, and I hope you will learn more about this as we discuss along the stochastic, okay, and moving average convergence divergence or MACD, which is also one of the famous ones. Okay, what is a MACD divergence? Okay, I will show you what's that on the chart. One of the famous also is an RSI, Relative Strength Index. All right. And fractals, okay, which is also very powerful if you have this in the chart and if you know how to use them. Okay. So that's it. Hope we can go through all the slides tonight. We have a lot to go through. Time is at the premium. Time is very fast, my friends. So I have to speak faster again. Okay. So we have a secret giveaway, a 50% deposit bonus, exclusive only for the group members. If you will deposit 100, you will get 150. In total, 500, 750. And if you will deposit $1,000, you will get $500 extra. How nice, huh? Who will give you $500? Even your mayor will not give you $500, but Algotur will give this to you the moment you deposit $1,000 tonight, my friends. All right. So avail. There's only 5 slots available. You cannot find this in any broker. Also, please spread the word to your friends, your family, even your enemies. Okay, don't care. We need to have them this information so they can avail this very limited time offer. So please avail, my friends. Okay, no one can give you this. All right, moving on now. Moving average. Okay, what is a moving average? A moving average is a technical indicator that combines price points of an instrument over a specified time frame and divides by the number of data points to give you a single trend line. Okay, I'll show you that in the chart later on. Okay, the moving average helps to level the price data over a specified period by creating a constantly updated average price. Average price. So, in the chart, it will look like this. Okay, moving average. Okay, let's start with the moving average. You go to indicator, then you will find this moving. Now I have it in my favorites. Okay, but if you will search it, just type moving average exponential. There it is. You click that, and you will have it like that, my friends. Okay, so you will go to settings. And you can change the length here. Okay, this is 9. Okay, you notice when it's in the number 9 or the lowest value. Okay, it's very near the candlesticks, right? It's very near, up, on the top, down. This is on the 5-minute chart. It's very near. Okay, it's almost touching the candles every time, right? Because a 9 moving average, okay, when you say 9, it's counting 9 candles the last 9 candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So these nine candlesticks, okay, it's calculating all the average price for on this price action. So it went down and it went up, right? And then it went on this price in this price here, 5184. So this at this point, let me get some pointing device here. Like I don't know where is that. Ah, it's here. Okay, this line now. Okay, it's calculated all the past 9 candles, and now it's in this average price. It means it's in five. I don't know what is this, 5180. Okay, that's the average price of this past 9 candles. So it's giving you, okay, it's plotting this line here. So it went down, meaning it went down because it went down, and it went up. It went up there, but you see, it went down here. So this is now the average price of this price action. That's how it works, my friend. Okay. So if we will change this to the very famous 20 or 50. So let's try 20. So it will be like that. You see, it's now counting the past 20 candles. So 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Somewhere there. So that's the past 20 candles. So it's plotting this line because of that moving average value. Okay, so now you get the idea. If you go to 50, if you will increase this, so this is the 50. See, it's now getting far away from the candlesticks. Okay, so it's counting the last 50 candles there. So let's just say this is the last 50 candles, and you have this line. So when it's above the moving average, above the line, so when price is above the line, so you only think of buying. Okay, so if you, for example, let's get this out of the way. If I will replay this, for example, I will replay this from here, from this point. You see, it's above. Okay, it closes above the moving average. Okay, from this point, don't think of selling. Okay, just get your long position. You place it there. The moment it closes, you buy there. And below this swing point is your stop loss, at least this swing point there. And you target 1:2. Okay, when I say 1:2, okay, you see this reward risk reward ratio. It means if you will bet $10, okay, you will gain $20. So that is ratio of 1:2. Okay, you will lose $10, but you will gain $20 on this trade. Okay, the higher you go, 1:3, so you will gain $30 there, but you will lose $10 here, right? So let's say this is your reward ratio. You want to win $30. Okay, and then you will play this and just see what happens. Okay, so it went up the moving average, right? It went there, it hit your take profit. Very easy, right? That's how an indicator works, my friend. Okay, no technical analysis. You don't need to read too much. But as long as you stick to the strategy, then you will get something. Okay, did it went down your drawdown area, the stop loss area? No. Price just went up there because the moving average already calculated the past how many candle, let's say 50, we are on the 50. So from this point on, the moment it closes, it calculates the past 50 candles, and now it gives you the clue or the signal that price will go up because the number of traders wants to buy in this price. Okay, and when it closed here, okay, you are there that time, so you just buy. That's it. How nice, huh? So, any questions? No questions. Everything is clear. How nice, huh?
Sir, may I?
Okay, man.
Sir, may I?
Yes, please. Yeah, yeah, sure.
So what is the important to put in the uh uh put 50 or just 20?
Yeah, yeah. Okay, very good question. Yeah, there's no wrong question, my friend. Everything here is okay. Just ask whatever is in your mind, and we'll answer this to the best we can. Okay, so what is the best number to choose? Well, how many candlesticks you must? It's up to you. Okay, for example, if I will put another indicator, you can put two, three, even how many moving average you want. So if I will put another moving average here, okay, now we have two now. One is a 9 and one is a 50. Okay, so if you will notice here, okay, let's color code this. Okay, I will change the color of number 9 to red, for example. Okay, this is the 9, the red one. Okay, the blue one is the 50. Notice what happened here, my friend. Notice this crossover. Okay, we call this crossover. Okay, it went down. Okay, you can see, I will zoom in. Okay, the red crossed over the blue EMA. It means it was going down at some point, which is true. It went down, even it went down here, even it went down here at this point, 5124. Okay, means price was going on the downtrend. Okay, okay, let's see. Let's try here. Let's rewind this. Okay, from there, you think it is going up. Okay, but the next 5 minute candle, it give this red candle. So price was pushing. Sorry, traders were pushing the price down. Okay, now look what happens. There's the crossover. It means this is the time to sell that time. So if you will put the short position here, okay, you will put your stop loss there, okay, on top of that swing point of that wick, and target this one. Okay, you target this swing low here. Let's see what happens. Huh? Okay, price was going sideways at that time, but let's see one more candle. Okay, it went there. Okay, it went there. It hit the take profit. You see, it hit your take profit. It means this is the signal that that time price should go down, and you should only think of selling. Don't think of buying. Okay, because there's a crossover. Once there's a crossover, okay, the candlestick is below the 9 and the 50, then that's the time to sell. If you will go to 1 minute, this is the price action. You see, there's an early signal on the lower time frame. We were in the 5 minute, now we were in the 1 minute now. Okay, if I will rewind this again, okay, let's say like that. Okay, then what happened? Okay, give the red candle. There is your signal to sell. The moment the 1 minute candle closes and there's a crossover there, you see the crossover, red to blue. Okay, you put your sell position there. The close of this candle, okay, just above or above this, depends on you. Okay, let's say your stop loss is there and you target this low here. Okay, let's see, huh? You see, there's a clear crossover there, and it's time to sell. Okay, selling. You see, the 1 minute will give you the full story here because it's in a lower time frame. Okay, it's going there. Okay, it went up there. Okay, it went on. Okay. So it means there, okay, it's here. Okay. Still it hit your take profit. You see it, the candle went there, okay, from this candle closure, and then you hit your take profit. Okay. That's the idea of the crossover and two moving averages. Okay. So it doesn't matter if you're using 20 or 50, but of course, if you're going to push the figure here on the 50, it will give you more, okay, more price action. Because if you in this area, okay, in this area, okay, you see, price is still going down. I mean, it started to go down when it made the crossover here. Okay, get your short position. Let's say it went there. Okay, what you will target? You target some low. You always look to the left. Okay, and it so happened we now know it will hit this point. So just push. Take this low for example. Okay, these lows here. You will target this. Okay, let's see. Of course, now we know what will happen. You see, price went down because there's a crossover, and then this 50 will just be there for you to, I mean, to give you the idea that price is on the downtrend because the candlesticks are not bypassing the 50 moving average. That's the power of the higher moving averages. Okay, so the price is going down. You see, you're making money now. Okay, it's respecting the 50. You see, it's respecting the 50. You see, then it hit your take profit. Very easy. The moment you see the crossover and these candlesticks are respecting the 50 moving average, then it's in a downtrend. Don't think of buying. That's it, my friends. Okay, I hope you understand now, Mr. Arvina. I hope I answered your question.
Yes, you answered it.
Yes, all right. Okay, now moving on with the slides. Okay, there's the simple moving average. SMA is a calculation that takes the arithmetic mean of a given set of price over a specific number of days in the past. Okay, while the exponential is a weighted average that gives greater importance to the price of a stock in more recent days. Okay, making it an indicator that is more responsive to new information. So that's why majority of the traders are using the exponential compared to the simple moving average. Okay. You can also choose it here, okay? Indicator, simple, simple moving average, there it is. If you want to use this, it's up to you. It will be there, KSMA, EMA, you can change it to 9 or whatever figure you want, okay? Same idea. All right, moving on. How does it work? Okay, I think I already explained this to you while we were in the chart. Moving averages are calculated to identify the trend direction of a stock or to determine its support and resistance levels. It is a trend following or lagging indicator because it is based on past prices. Which like I told you, the past the 9 candles, past 50 candles, depending on the figure you will use. The longer the period for the moving average, the greater the lag. Okay, a 200, there's even a 200. People use this in a higher time frame if they want to trade the hourly, the 4 hour, or even the daily, they use the 200. It means it's calculated the past 200 uh, candlesticks, okay, which will have a much greater degree of lag than a 20 compared to a 20 moving average because it contains prices for the past 200 days, okay? 50-day and 200-day moving average figures are widely followed by investors and traders are considered to be more important trading signals. Yes, you can do that. Okay, let's change this to 200. Okay, there's your 200 to the 9. Okay, when you see the crossover there and time to buy because that this 200 will give you a much longer time span of trading because the 200 is the candlesticks are above the 200 meaning price should really go up there. Okay, and if you will go to the daily, if you will use the daily time frame, look at the 200. This is the trend line. Okay. Oh, these are my past lessons, fresh levels. Okay, we will go there one day. Okay, you will know more about this. Huh? This is This is the Malaysian SNR strategy. Okay, we will go through that one day. But for now, I'll teach you the basics. So you see the 200, my friends. You see, from September, October, November, December, and now 2026, March, you see the 200. The candlesticks are above the 200, and this is on the daily. This is months of price action, and it's respecting the 200. It will not cross this 200. See, where was the last crossover here? Here. It was October 2023 when the EMA 9 crossed over the 200. That's the last time it did that. And price just went there up, 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 up. Now we are in the 5,000s. You see? All right. I hope that gives you some idea now. Investors may choose different periods of varying lengths to calculate moving averages based on their trading objectives. Short-term moving averages are typically used for short-term trading, while longer-term moving averages are more suited for long-term investors. All right. So how does it work? While it is impossible to predict the future, yes, which is true, but we only trade what we see. We always say that in trading, we always trend what we see. So while it is impossible to predict the future movement of a specific stock, using technical analysis and research can help make better predictions. A rising moving average indicates that the security is in an uptrend, okay? While a declining moving average indicates that it is in a downtrend. Just like I showed you when it may see the crossover there, or nine or nine below 50, so it's respecting the 50 moving average below. Okay, so it's a downtrend. When it's up, so it's time to buy. Similarly, upward momentum is confirmed with a bullish crossover, which see, bullish crossover and the bearish crossover, which occurs when a short-term moving average crosses above a long-term moving average. Okay, conversely, downward momentum is confirmed with a bearish crossover, which occurs when a short-term moving average crosses below a longer-term moving average. Just like this. Okay, the 9 and the 50. This is the long term, this is the short term. So in day trading, I always use the 15-minute time frame. See, you can see there. Okay, at least this is a 3-day price action. This is today, this is yesterday, and this is the day before that. So this is Friday, okay, Monday and Tuesday. See, crossover on the 50, time to sell. Okay, when it's crossover, made a crossover on the 50 again, time to buy. That's it, but you just have to wait. Okay, you were selling here. You see the crossover there and target this one. And then when you see the another crossover there, okay, it closes there, there's above this, and you can, sorry, there's the long. Okay, you target this high here. Okay, and then you will get it. Okay, see? I hope you get the idea now. Okay, moving on. So that's the 50. Okay, 50 moving average. See, when it's above the 50, it was in an uptrend, people are buying. And then 200 here, as I've shown you already. See, it's respecting the 200 more because it's a long period. Okay, moving average. So it's respecting this. Okay, this is on the daily, on the Euro USD dollar. Okay, you can choose whatever asset you want. Okay, but I'm a gold trader, so I always show you the gold most of the time, but you can also use currency pairs. Okay, GBP USD, Euro USD, Japanese yen versus the US dollar. It all depends on you guys. All right, and the crossover, the very famous crossover I told you. Okay, the 50 now is crossing the 200. You see, and now we are getting bigger here. Okay, 50. So 50 candlesticks against the 200. So it made a crossover. Prepare to buy for days, even months. Huh? All right. This is on the daily time frame on the Euro USD example. Right, my friends? That's it. That's how you use the moving average crossover strategy. Okay. Now, stochastic. This is really my favorite. Okay, I'm gonna show you, share to you that now. I need to see the stochastic in my chart every day. Okay, so a stochastic oscillator is a momentum indicator. Na momentum, comparing a particular closing price of a security to a range of its prices over a certain period of time. The sensitivity of the oscillator to market movement is reducible by adjusting the time period or by taking a moving average of the result. Okay, because you need to understand the concept here, okay, my friends. Okay, there will be a time you don't need to understand all this, but for now, I have to open to you this window. Okay, by adjusting the time period or by taking a moving average of the result. It is used to generate overbought and oversold trading signals, utilizing a 0 to 100 bounded range of values. Okay, you will see this in the chart. I will show. It is a popular technical indicator for generating overbought and oversold signals. It measures the momentum of an asset's price to determine trends and predict reversals. Okay, it measures recent prices on a scale of 0 to 100 with measurements above 80, indicating that an asset is overbought, and measurements below 20, indicating that it is oversold. All right, let me show you now in the chart, stochastic. All right, where's the stochastic? I'll show you. Go to indicator, search it. Okay, there it is in my favorite. Okay, but give you the full idea here. Search it there, stochastic. There it is. By TradingView, these are people who make their own indicator, but with the one default, it's there by TradingView. Click stochastic there. There is your stochastic, my friend. All right. So you will go to the cogwheel in the settings here. Okay, for me, I'm changing this to 10. 10, the length, K length, okay, to 10, the K smoothing to 3, and the D smoothing to 3. You see how now it's smoother. You can see the crossover clearly now, right? So take a screenshot of this or write it down on your notes. 1033 is the inputs. You will change this to 1033 each and every time. If you want to copy my stochastic. Otherwise, to each his own. It's up to you. You can increase or decrease this as you like. Let's say 15, what it will look like in the chart. It will look like that. See? See, it will change. It will change. It depends on you now, which one is closest, okay, to reality of price action. But for me, it's 1033. It's all up to you now. Okay, so let's go now to the chart and what is this indicators will benefit us. Okay, in the 15-minute time frame. Okay, what do you notice, my friend? Crossovers. Always look for the crossover. Okay, where is the crossover? There it is, my friend. There is your crossover there, right? That is your crossover, blue to red. Look at the crossover. Price went up, right? Price went up. Price started to went up in this point. Let's say at this point, if I will put the diagonal line here, sorry, a vertical line here, okay, at this price point, there. You see this crossover there on this vertical line? It started there, right? And look, once this red candle closes, okay, you buy there. Or if you want, you want to wait one more candle, but this is in a 15 minutes. This is another 15 minutes of waiting, let's say you are not you don't trust the red candle, you wait for another green candle to form, and there it is. Now the blue is above the red. It's a crossover, means this is oversold. Anything below 20, you see the 20 here, 20 line here, it's oversold, means at some point in time this will now reverse. So price went up there and made the crossover, and there it is. There it is. You will get your long position there. Okay, stop loss for me, it's always 50 pips, but it's your money. Okay, you can adjust it there and target this high. For example, you want to target this high here, but you have to wait. How many days is this, my friend? But it will eventually hit your take profit there. Okay, maybe this is too much, but in this example, okay, let's say you want to target this high here. This is the high of New York. As I already explained to you in the trading sessions there, this is the New York session, the orange one. You target this and look, it hit your take profit. But you just have to wait. This is in a 15 minute. Huh? This is Monday. This is Tuesday. Okay. And then Tuesday, see Tuesday, this is, okay, this is, yes. You see, how many days? 2 days of price action to hit your take profit. That's it. Okay, that's the stochastic. And of course, you say, oh, no, it's overbought. Okay, anything above the 100, the 80 here is overbought. It will have some crossover there again, but you're already winning. Okay, your stop losses here, you are protected. Price, yes, went down to your stop loss area, your drawdown area at one point, but it respected this one and it started to fly again with this crossover. Okay, crossover, time to buy. Okay, and then it crossed your 50 moving average now. Now more pressure to buy, and it went your way, right? Very nice. That's it, my friend. Now I hope you already get this. So I have to see. You see, without the stochastic, okay, where do you think this will go? If I will hide this, if I will hide the stochastic, now you are sitting in the chart. Oh, will it go down or will it go up? You don't know, right? Because especially you are a beginner, you don't know what to do. Now you have your stochastic. Let me give my stochastic back. There it is. Okay, it's near the overbought, but always check if it's going to make a crossover there, because you see it can make a crossover. It doesn't need to reach 80%, the 80 line here every time. Sometimes it will cross over there and price will go down there. Okay, that's why you will be in a drawdown, but you have to wait. Always buy at the lowest point and always sell at the highest point. At this point, we don't do nothing. We wait for more price action. Okay. So, for example, example, okay, you sit on the chart, you find the price action at this time. Oh, it's going down. Should I sell? So you try. Okay, you sell there. Stop loss above those high. Target this low of Asia. What is your reward ratio? 1 is to 1.64. Okay, you try 1 is to 2 at least. Huh? 1 is to 2. Okay, you lose $10, but you will gain 20. Let's see the price action. Okay, you see it's going there, going to the oversold area. It went to your stop loss area and it hit your stop loss. You see, because this is not the time to sell. Okay, in time you will know, because you are above the 50. You are above the 50, so there's more buying pressure there. It doesn't mean that the stochastic is showing you this, but always check the more confluence you have, okay, the better. It means if the two confluence are matching, then yes. But they are against each other. Stochastic is going down, but your 50, sorry, your candlesticks are above the 50 and respecting your 9. So there's more buying pressure. So they are in conflict. Okay, they are not in agreement. Don't do the trade. So they must align each other. So for example, okay, for at this point, okay, at this point, you're sitting on your chart and you find this price action. Let's all delete this. Okay. Now I am my stochastic is overbought, meaning maybe this will sell, but my 50 is the candlesticks are above the 50 and it make the crossover. So let's play this, okay? They should agree, right? They should agree. Okay, you see, the stochastic is going down. You now this is going up. Okay, but this is going down. So you wait for the stochastic to give you that signal. There it is. There's the crossover. That's the time to buy. Okay, 1:2. There, 1:2. Play it. You see, my friend? Okay, that is the current price action. So that's the idea, right? I told you once it crosses the crossover on the 50 means there's more buying pressure. Just wait for the stochastic to give you that crossover also. So they should both go on the same direction. So a crossover here, a crossover there on the EMAs, then that's the time to place the trade. Okay? You get the idea? Any question?
Me, I, sir. So,
Yes.
not necessary to hold until go down to the 20 before we buy, even in the middle of 50, as long as they have conducted a cross line in the upper
Yeah, yeah.
portion of
Yeah,
80.
I think I got your question. Okay, when you see the crossover there, okay, this is the 9 and the 50, right? Is it the 9? Oh, no, it's the 9 and the 200. You see, when it's doing this one, okay, okay. For example, you've seen the crossover now. Always remember, my friend, a 15-minute candle is not is no joke. Can you wait 15 minutes every time for the candle to close? Are you that patient? If you are that patient, then yes. This is 15 minutes of your life gone forever. This is just one. This is 30. This is 45 minutes. This is 1 hour, my friend. These four candles here, okay? These four candles took your 1 hour of your life just waiting for that crossover. But the reward here is another thing. Who will give you this reward in the 15-minute time frame for all these profits? Do you know what is 15139? If you will start buying here, 5139 to 51, okay, 39, 40, there is 49, 59, huh? 69, 79. Who can tell me how many pips is this? 5139 to 5179 of price action. If you will zoom in, okay, the more the more you will see how big this profit is. Okay, at this point in time, it's very small. This is nothing. No, zoom in, my friend, zoom in. 5139 to 5179. How many pips? Anyone? My friend, just hover your cursor, your mouse to this long position, and you will see the target there. It's 338.67. That means it's 386 pips. You know what is 386 pips in forex? In gold, huh? My friend, we are talking about big money here. Huh? But, okay, you lose 1 hour, you will gain 1,000, 2,000, $3,000 here. This is your $3,000. There. That is your $3,000. You have to be patient. Yes, it's boring. No one care about you. You are like a nerdy person sitting on the chart. But the moment you are profitable, my friends, you will have the last laugh. Okay? So always keep that in mind. Just check the crossover. It's respecting the nine. Is it touching the red the line here? The red moving average? No. The more price went up there. Okay, for the stop loss, we can talk about this another time. But my point here, once you see this crossover, the more this is the confluence that it's time to buy. And made the crossover here from the stochastic, then just ride and wait patiently. Okay, it will take you to your take profit. That's it. Okay, it doesn't have to be 50. It could be a combination of let's say let's change the 9 to 20. How it looks like. You see, the crossover started here. Okay, but look what happened. If you will buy here, you said, "Oh, it's time to buy." It's made the crossover. Oh, now it hit your stop loss. You will have a deeper stop loss just to protect you. You think your fund will support this? No, you need more money. It depends on your lot sizes. Everything is affected here. So now if you put your stop loss there, bye bye. You lost, I don't know, 20, $50 depending on your position size. So there's more to learn because you see, you're buying here, but the stochastic made a crossover there. Okay, you have to wait for another clear crossover like here. Okay, it was there's a crossover, but this crossover is lower than this crossover. So the more oversold this thing is. So just wait patiently and wait for that the low crossover there, okay, to buy. So when it made the crossover there, okay, then you put your okay, you waited for this green candle to close, and then that's the time to buy, my friend. That's it, because there's a crossover here in the stochastic and it is above the 50, above your 20. That's the time to buy. Okay? I hope you get this clear idea. Okay? Well, time is very fast. Okay? We haven't finished the rest of the slide. So I hope you understand, Mr. Arvin. I hope I answered your question.
Yes, sir. Yes, sir.
Okay, well, in time you will see. Okay, you just practice this in your trading view chart and see. Okay, you need two confluence at least. Okay, they should be aligned. If one is going up, the other should be going up. If it's going down, but your EMA is going up, so wait. This is not the time to buy. Wait for the crossover on the overbought position. The more it's lower, the better. Like this one. Okay, see, it's on the oversold. So that's the time to buy here. Okay, when you finish the green candle there, that's the time to buy. Target this high here, and you get your money. Okay?
Sir, just a
Yeah.
clarification.
Yeah.
I think much better the combination of EME is 9 and 200 because when you change it to the
Yeah. You
20,
see, the nine, yes. You see, if I will do the nine, yes, because it's closer to the candlesticks, right? It's closer to
yeah,
the candlesticks. It's giving more early crossovers, right? So if I will change this to nine, it will be here now. You see, it will be there. So that's why a strategy, okay, it all depends on the trader. If he wants his nine and the 200, then let him have it. If one guy wants the 20 and 30, 50, sometimes 100 is to 200. One is 100 and one EMA is 200. But they're looking for long-term swing trading, like they will trade for hours, for days. So they need this information before they can enter their trades. But for day traders like me, okay, I stick to the 9, the 20, whatever I feel for that day. Or in some cases, the more experience you have in trading, the more you will know which one is for you. Okay, so maybe for you is the 9 and the 200, then so be it, Mr. Arvin. You can use this, yes, as long as you are winning. Like this, if you are winning on this strategy, you will put your buy there. When you finish the course, okay, you, okay, when the crossover there, maybe you bought here, okay, then just wait, okay. Manage your stop loss area. You will put it below this or below this candle, whichever. That's it, right? So it all depends on the trader, Mr. Arvin. I hope that answers the question. Okay, moving on now. This is an example of the Euro USD on the chart. How you will put your moving average or any indicator. This is a stochastic. Now I've shown you now that stochastic. Okay, and okay, the divergence. The divergence. This is also very powerful. Okay, many traders are using this. Okay, now let's see the divergence. What is a divergence? Okay, so a divergence is simply like this. You get the line, okay, the trend line like that. Okay, you mark the, let me go back to that slide. Okay, you mark the lows. Okay, you are marking the lows of this because it's a downtrend, so these are the lows. And if you can see that in the stochastic, the line is going up. Okay, we are connecting all the lows, but they're diverting. Okay, they're having this divergence. One is going down, one is going up, and it will snap at a specific time once they meet this equilibrium. Okay, once it meets the equilibrium, it will make the crossover there, and price starts to go to the other, okay, to the other side, to the other direction, just like this. So just do that in the chart. Okay, you are connecting the low here. Okay, you are connecting the low on the stochastic here. So clearly this is a divergence. So it will snap on the equilibrium there on that crossover there, and price now went to the other direction, right? That's how you use the divergence, and you will hit your take profit somewhere there. Okay, you see, because it's not making any more lows. Okay, it's fighting this pressure. Okay, yes, but you see in the stochastic is giving you the another data here, which is it will snap here, and it will make the crossover and fly to the other direction. That's what is a convergence is, huh? Sorry, divergence. Okay, so let's move on now. That's the example there. The MACD, okay, moving average convergence divergence. Moving average convergence divergence MACD is a technical indicator to help investors identify price trends, measure trend, momentum, and identify entry points for bullying, for buying or selling. Moving average convergence divergence MACD is a trend following momentum indicator, just like the stochastic, that shows the relationship between two exponential moving averages of a securities price. So MACD was developed in the 1970s by Gerald Appel and is one of the most popular technical tools readily available in most trading platforms offered by the online stockbrokers. So what is a MACD? What is a MACD? Huh? Okay, we have the stochastic there, and we have the MACD. So search indicator, moving average convergence divergence. Okay, once you have that, There is your MACD. Okay, for the MACD, I don't play with the settings. Okay, this is default 12.26.9. Okay, just leave it as it is. It is now working fine. But you see the difference between the MACD and the stochastic. The stochastic is more noisy. It's giving more uh, crossovers here compared to MACD, right? See, MACD made one crossover, but for the stochastic, it made one, it made two, three, four, and five here. But for the MACD, it's only one and two here. So this is more slow. The price action of its crossover is more slow. Okay. So in this example, two oscillators is also very powerful. Okay. One for stochastic and one for MACD. Now you saw the stochastic made the crossover, time to buy. Look for your MACD, made the crossover, the more it's time to buy. Huh? So once you made the crossover there, okay, you put your stop loss here. Okay, put your trades there, your stop loss, okay, below that swing low there, and just target this high, for example. This New York sessions high there, and eventually it will hit your take profit. You see? Because MACD is going up, stochastic is going up. This is also what I'm using until now. Also one of my favorites, you see, when they made the crossover there, a crossover on the stochastic, time to buy. Okay, place your trade there, stop loss below the swing points there. It will protect you and just wait to hit your take profit. Okay, it will take time, but it will eventually go there. Okay, and then watch your MACD making more crossovers here. Okay, when you see this crossover, another crossover from the MACD there, you can buy again here. You can buy again there. Okay, because it made the crossover the stochastic and one for MACD made another buy position there and target these highs here again. Okay, look to your left. Okay, target this Asia high, whatever is best for you, and it will take you to the take profit again. So that's MACD. And also, if you can see, there's the red and the green bars. Okay, the red. Okay, it's red means this is still selling. Okay, if I will rewind this. Okay, let's see. See, it's giving the red. So don't buy. It's just selling now. Okay, more red bars there. Okay, time to sell. Okay, time to sell. Target this low here, for this London low here. Okay, let's see if it will hit it. Okay, you see, it hit it very easily because it's giving these red bars here, crossover there in the stochastic and the MACD. So there, once you have that, okay, you see the stochastic made the crossover, giving these wicks here means a wick here means some resistance here because this is a resistance zone here. Okay, there's a resistance there, price bounce there. So this was a resistance. So you can put your take profit there. Huh? Sorry, this is mistake. This is a long position. You should do a long position. Sorry, short position there. Okay, you see the crossover there. There. And that's your resistance and price will go there. You see? Okay, more selling there. See the crossover now. Maybe it will happen here. Okay, I see crossover on the stochastic, but the MACD is still not making the crossover. Okay, now you see the from red to pink. Okay, means the sellers are getting weaker and buyers are now stepping in the game. So this time you will place your long position there, target this high here, stop loss below that resistance point. See it made the crossover there and exactly where you are buying. You just have to wait. You see, there it is. It is your take profit. just basing your decisions on the crossovers on the MACD and the stochastic oscillator. Okay, this is just example of how you use the indicators, my friends. Okay, and let's say move average is a technically the entry points by buying or selling. I said it. So the default is 26, 12, 9 days is the default. See, that's the default. I'm not touching that. That's it. And when the MACD falls below the signal line, it is a bearish signal indicating that it may be time to sell. Conversely, when MACD rises above the signal line, the signal is bullish, suggesting that the asset's price might experience upward momentum. Crossovers are more reliable when they conform to the prevailing trend. If MACD crosses above its signal line, above a brief downside correction, with a longer term uptrend, it qualifies as a bullish confirmation and the likely continuation of the uptrend. So based on that explanation, my friends, okay, we will go to the settings. See, there's the signal length, okay, and the fast and slow length, okay. So 12, 26, 9, just what I've shown you there in the slide. Okay, where is that? There. So I'm not touching that. Okay, that's it. So it is a bearish signal indicating that it may be, see, when MACD falls below the signal line, okay, where is that signal line? The 9. So the signal line is the red one, and the MACD line is blue. So there is your explanation. When the MACD line falls below the signal line, it is a bearish signal indicating that it may be time to sell. See? The signal line falls below the MACD line. See, made the crossover there, it is time to sell. And opposite when it made the crossover here. Blue above red is buy. And you will see your green bars there. That's it. All right. I hope everything is clear now. Huh? Now, so there's many more here. Okay, when a MACD forms a highs or lows. Okay, for example, there's a divergence. Again, you can always use this also for the MACD. The same with the stochastic. When you see the divergence, connect all the lows of the MACD and the lows of the candlestick. When they have this kind of divergence, they will snap in that equilibrium, and then they will go to the other directions and time to buy. Okay, when you see the crossover there, time to buy. That's it. Same here for the bearish. You connect all the highs and the highs on your MACD there, the line, there is a divergence. So it will go to the downside on this example. That's it, my friend. And relative strength index, okay, also one of the oscillators, RSI, they call it, is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price, changes to detect overbought or oversold conditions. Again, it's all the same like with the stochastic RSI displayed as an oscillator, a line graph on a scale of 0 to 100. The indicator was developed by J. Wells Wilder Jr. in 1978. The RSI provides technical traders with signals about bullish and bearish price action and is often plotted below the graph of an asset's price. An asset is usually considered overbought when the RSI is above 70 and oversold when it's below 30. In some situations, the RSI line crossing below the overbought line or above the oversold line can be seen by traders as a signal to buy or sell. So how does it look like? It looks like that. This is the RSI indicator. There's also some crossover happening there. And if you will apply this to your chart, my friends, let's all remove these indicators now that are stochastic and the MACD. Okay. RSI, relative strength index. There it is. I'll put it now. It's my favorites. There it is. For me, I leave it as a default. RSI is default 14, but you can also play with this. You can play with the inputs here. In the stochastic, there's 1033, but for the RSI, I'm just using the default. Okay, as soon as I see some crossover there, for example, here, okay, there's a clear overbought here. Sorry, oversold. Okay, it's now below the 30, and this is the 70 line. This is the 30 line. When it's below 30, it's oversold. At some point in time, it's time to buy. This make the crossover there, and look, my friends, where's the crossover? It happened. The crossover happened there. Okay, below, put it below your resistance there and target this high. You see? And now you made your money. And it will go eventually on the overbought line here on the 70. And time now to sell. Okay, it will sell eventually, yeah? Especially when it's making a new crossover here. Maybe it will sell here after our webinar. It will sell there for the, okay, something like that. But I think we are in a replay mode. So this is this is March 10, Tuesday. So this this is yeah, this is still like new. Okay, let's stop this. Okay. Okay, this is the latest price action. So it made the crossover there. Okay. See, now it's respecting the signal line. Okay. And so just stick to your guns. Huh? Okay. Put your stop loss there. And who knows, target Asia's low or last night's New York session there. And price will give you this win tonight. Okay. So just practice this. RSI, very powerful. Also, it was overbought and now making all this crossover, respecting this yellow line here, and it will now go to the downward direction, huh? But as I've told you, there is a 50 EMA, so 200 EMA here. Maybe price will just go there and respect this 200, and it will reverse there. The moment it cross this sorry, when it's reached this oversold position here in this in below 30 and time to reverse is which will coincide in this 50 200 moving average there and just reverse the price again. So that's the time to buy. The moment you see that, my friends, get your long position. Okay, cross over here in the RSI. The 50 is sorry, the 200 is respected and target the other direction there. For example, you will see something here, some highs here. Okay. Okay, you will see some high here, maybe some high here. Who knows? Anything can go. But at least your risk to reward ratio is greater than your stop loss. Okay. That's the RSI overview. And think we finished the okay. Also, there's a divergence. Connect all the lows here in the candlesticks and connect all the lows in your RSI. When you see this divergence, it will snap there, and in the equilibrium, it will go to the opposite direction. Exactly, they all they work the same. All the oscillators work the same, my friends. Okay. That's say falling price lows, rising highs, okay, RSI highs will give you this price action. Okay. Fractals, the last one. The fractal indicator is a trading indicator used in technical analysis that is used to identify potential trend, reversal points in the market. It was developed by renowned trader Bill Williams and therefore is also referred to as the Williams fractal indicator. Yes, which is very true. You will find Williams fractal in the MetaTrader 4. In mathematics, okay, fractals are basically any kind of recurring pattern. The premise of the fractal indicator is that you can detect and potentially profit from recurring patterns of price movement that occur across various trading timeframes, hourly, 4 hour, daily. Okay, so when we say recurring, it's repeating. Okay, using the fractal indicator is essentially the recognition of a pattern in the price action of a traded security. Once the pattern is recognized, traders can then buy or sell depending on whether the fractal indicator is bullish or bearish, looking to profit from a market reversal. So what does it look like? This is the fractal. See, it's going up. When it's going up, it's always reverse. When you see the arrow going up, the price will go down. If you see the arrow go pointing down, means price will reverse to the upside. Okay, so let's see that. Okay, that is our last indicator. This is also very powerful, my friends. Fractal. Just search fractal. Williams fractal. Let's say this. There it is, my friend. Okay. So it's too much. You say, oh my God, what is this? So let's play with the settings. Fractal period, let's say 1. Will it give us fewer? No, so we need to increase this. I don't know, like 6 maybe. Yes, you increase this. I think 6 is a sweet spot here on the 15-minute time frame, but you can also play with this, okay? I cannot say I'm not an expert to tell you which one to use. You need to play this with your own liking. So, for example, you see crossover on the other side, a red fractal pointing down means this will reverse, right? Let's check. Okay, you are waiting now in the chart. You're in the chart. You are sitting there. You are waiting patiently. Okay, and then suddenly you see this one there. But you see the delay. You see the delay. Did you notice that delay? Where is the red arrow? Oh, price action is going up now. There's a crossover there, but you are still waiting for the fractal. Huh? As I told you, it's a lagging indicator. Okay, this is in the 15 minute. Huh? So 1 hour is finished of your life there. And now it crossed the 200, still no red fractal. And finally, there it is. Because it's giving you the best so the optimum signal to buy. Let's if you will follow this, okay, for example, you started buying here, it went up the 200, it give you the fractal, it give you the crossover. What more are you waiting for? You buy. 1:3. Let's go. You see, my friend, they did not give you the profit just by waiting for this three confluence above the 200. You have your red fractal, you have your RSI crossover, you started buying from this close, okay, this candle close, then price now went there. But for how many how many amount of time? Let's see, you can get this ruler, okay, measure this. You started buying from this candle to this candle until it hits your take profit. You can see that it's 22 bars. That's 6 hours, 30 minutes of waiting. You can wait 6 hours. Why not? If this will give you your profit, you have to wait 6 hours in the 15-minute time frame, but you have all your indicators telling you to buy. Then what more do you want, my friends? Okay, so that's it. And finally, we reach the end of the slide. Algotur is a quantitatively driven trading company focusing on market making and multi-asset trading. Its expertise spans various asset classes, including futures, options, stocks, commodities, forex, and cryptocurrencies. Algotur is a quantitative trading service company with over 10 years of experience in trade strategy development, focusing on proprietary trading. So let the timers talk. You can always read this in the Algotur website and read more of this amazing company. Share it with your friends, man. You can share it with your friends, your family. Just forward them. Come and read more about Algotur, and they will have this amazing information. And we have the copy trading also. Okay, you can start with $100. You can copy our traders' trades and earn money on the side. Okay, very easy. You do. There's no more. Hassle for you. If you're a busy person, you can always copy their trades, and when you reach home at night, you made your money. So contact our Algotur managers, and they will happily explain to you about copy trading. All right, my friends, and we have some insurance program here to protect your capital. Originally, this was 1,500, but now for only $500, you can avail this insurance program where you will have a return on investment of 26.79% on the sweet spot here of $6,000. Contact our Algotur managers for more information about this. Okay, there's many perks about this insurance, and they will happily assist you about this VIP benefits. All right, my friends. And lastly, Zoe. I hope you've already downloaded Zoe. You can trade here, available on Google Play and App Store. There's the QR code. You can download this in your mobile phones, Android or iOS devices. Okay, Zoe is a global financial technology company under Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong and the United States. Specializing in safety trading, Zoe offers a diverse range of financial products, including forex, precious metals, oil, indices, and U.S. shares. Zoe is fully regulated, offering a secure professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. So, my friends, we reached the end of a slide. Lastly, our secret giveaway of 50% deposit bonus. Deposit 100, you will get 150. 500 for 750. 1,000, you will get $500 extra. How nice, my friends! Avail now. Spread the word to your friends, your family, and who else you might want one so bad. Find something, okay? Borrow money from your friends, your family, because no one will give you this extra 50% on your trading capital. All right, my friends, contact our Algotur managers to avail this offer. That's it, my friend. I hope you learned something new again about indicators in trading. If there's any more questions, please do so now so we can wrap up this webinar.
May I, sir?
Yes.
First
Is
of
there
all,
any?
I have no question with your with regard to your fruitful discussion about learning in the trading. For me,
Mhm.
I just learned how to use the moving average, then
Okay.
the stochastic. I just
Stochastic,
re-
yeah.
oh, I just recently used it in the gold. So they have a
Okay.
cross line in the 15 minutes. So I just wait to close it. Then I just got sell. It's true. I just
Yeah. Yes,
believe
that's the
in it.
idea. That's yeah,
Oh,
that's the idea about these indicators. The more screen time you will have. Okay, I believe you are a beginner, right? So the more screen time, the more you will understand and have the first-hand experience how these indicators work. Okay, I'm just showing you the 15-minute. There are other examples on the 30-minute, on the 1 hour, which will take you a lot of time of waiting. But always remember, my friend, time frame is fractal. It's always happening in the same. The concept is always the same. Okay, they will always have this price action under specific time frames. So just sit there and watch the price action, how these indicators work for you. Adjust the settings in your liking as much as you want. The more you get the hang of it, then the better for you, right? So I hope that answers Mr. Arvin. Is there anyone else who want to ask some question? Okay, I think you got it. So you can always watch this on your Algotur's YouTube channel. You can always watch our webinars and learn more about trading. So for this webinar, when we finish this, you can always go back to Algotur's YouTube channel and watch this on your convenient time and master this strategy. All right, my friends, until we meet again. Okay. See you next Thursday for our more engaging discussions and more secret sauce to come. Okay, my friends. Until we meet again, good night and bye bye.
thank you, sir.